Monday, December 12th, 2022, Maneco 64, home of alternative economics and contrarian views. So is hyperinflation really out of the question? Are things settling down, especially in the UK? Are prices coming down? Well, that's what we're going to look at today, and it's related to one of your questions from last week. So we're going to continue to do the daily questions. Before I start, just have a look at the news. And this is part of the hyperinflation story, I would say. One part of the coin. Headline here in the FT, National Grid asks standby coal plants to fire up as cold grips UK. So this climate change agenda is failing miserably. The Climate Change Act of 2008 is led Britain on the road to these renewables, which are not working right now. There's no wind, so wind power has gone down. There's no sun. And it reminds me of what happened in Germany, but it didn't happen exactly like it's happening here, of course. It was because of World War I and the fact that the region in Germany that had all the coal was occupied and exploited by France for about 15 years. That was part of the Treaty of Versailles. So there's a symptom there that's very similar. Here it's been self-inflicted by our political class. It's continued to be inflicted. So now they're going back to coal. I think though it's just temporary. They don't want to go back to coal. We've got plenty of coal. So that's one headline there. The other one, to those who say our economy is okay, there's no collapse. Yes, things are still running relatively well. But when you see this story here, in the Evening Standard, government to hold Cobra meeting amid widespread strikes. Royal Mail staff, nurses, paramedics, rail employees, and border office officials will stage walkouts over jobs, pay, and conditions. So it's talking about how the government is going to use the military to train them to do these jobs. Are the military personnel, are they going to be happy about that, having to work during Christmas? I don't think so. And that's when things get really bad, when the military might go on strike. I don't know if they can go on strike, or they won't be very happy. So that's the situation. We've got a lot of snow on the ground. Those of you in the northeast of the US or Canada might say, so what? But the thing is, it doesn't snow very regularly here in the UK or London for that matter. And the local communities, the council is not prepared for it. Hopefully they'll clear the roads. So before we go into the questions for today, and one of them is related to the topic of the video, of course, I'm going to go through what the crack-up boom or hyperinflation is. And it's from the book by Ludwig von Mises, Human Action. So the crack-up boom, are we there yet? But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The crack-up boom appears. Everybody is anxious to swap his money or currency against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as a media of exchange. They become scrap paper, scrap digital entries. That's what I put there. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandats territoriaux in 1796, and with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So there you go. That's Ludwig von Mises. And that's basically hyperinflation, when people lose confidence in the currency because they know that they're going to keep printing and issuing it and borrowing. And especially when the central bank's balance sheet is like losing value and also is insolvent. And we saw last week that in the US, at least, that's going to continue. Joe Biden administration bailed out the central states pension fund to the tune of $36 billion. And some people think it's going to cost as much as $90 billion. His set a precedent there. The Bank of England bailed out private pension funds here back in September when they did QE. So it's going to continue. That's all politicians know how to do. They're scared, and if things go badly, they'll start printing. Other side of the coin is this what's going on geopolitically as well. Supply chains have been disrupted in the last 3 years because of what happened in 2020, and they are not back to normal. The energy market is disrupted. We don't have like the flow of natural gas and oil. It's not there. And yes, everything is unraveling, I would say. So back to the questions then. And we're going to start with the other questions first. I'm going to go to this hyperinflation question at the end. And then I'll talk a little more about it, why I think we need to be prepared for it. And hyperinflation is actually a good thing because it would destroy the currency, and the currencies that we have right now, they're beyond repair, and it would also like neuter the power of the elites, I would say. But anyway, question one from last week is from like with Rome, inflation is bringing down the West. That's from that video. Hi Mario and Billy, a question. Unfortunately, Billy, he's not here right now. He's in the house. Hopefully we'll make it to the vets today to see how he is. As I am based in Switzerland, what are your thoughts on the Swiss franc? Historically, it has been a safe haven currency. So with global metals pricing in US dollars, how would you compare and contrast Swiss franc, cash, gold, silver for wealth preservation? Or to put it differently, how do you see precious metals pricing behaving in Swiss francs? Keep up the great work. Fluffy Typhoon. So for that question, I'll show you this chart here. This is from Incrementum AG, gold performance since 2000 in various currencies. And this will also be valid for the question about hyperinflation, because I think the guy who asked the question, or the person who asked the question, said gold had been doing nothing for the last few years, and he's in the UK, or she's in the UK. So first of all, let's go to the Swiss franc. As you can see, the Swiss franc, gold is up 6.5% every year, annual performance since the year 2000. Gold is down slightly in Swiss francs this year. The Swiss franc was seen as a safe haven, and it was until 2000, because the Swiss franc was 40% backed by gold by law. But then they dropped that, and there's no gold backing anymore for the Swiss franc, and the Swiss sold half their gold. So I don't think, out of the fiat currencies, as you can see here, the Swiss franc is the best performing currency versus gold, because it's only gone, we've only had 6.5% rise annually by gold versus the Swiss franc, but it's still a bad performance. I would say that gold is still the place to be. The second question, and it's from the same video. Mario, I would be forever grateful if you could talk about stocks, how they will be affected with introduction of CBDCs. I have my portfolio traded through with Barclays, and am concerned that what could happen to my stocks if Barclays imploded. Are stocks covered under FSCS scheme? Would I be able to convert my shares on settlement in sterling into CBDC? So many questions. Thanks. Well, there's a couple of questions. Counterparty risk, Barclays, would it survive? I think it would. I think the government would nationalize Barclays if that were to happen. But again, nothing is certain. I think if you're able to hold to those shares, your portfolio through, let's say, an event like this, they will be there, and they might not be able to be converted right away, but I would hold on to it. And that's why, as I've said many times, gold and silver outside the system, a hard asset with no counterparty risk, it will give you some peace of mind, even if that happens. And it's an insurance. So again, people have asked me in the past, where can I get gold and silver? People who've never bought gold and silver. Well, here in the UK, I recommend Gold Investments. I've been affiliated with them for the last few years, or 5 years or so. And I've got a promo code with them, Maneco64. You can give them a call. They'll help you out as well, how to understand what to do. And yes, go to the description below of this video and all the details will be there. In the US, I've got 2 affiliates, of course, Miles Franklin and Andy Shackman, and ITM Trading with Lynette Zhang. You can choose either one if you're interested. Number 3, all stocks and bonds are ultimately denominated in dollars. So how does investing in miners reduce your exposure to fiat? Well, because during an inflationary scenario like in the 70s, the miners and gold will outperform the drop of the dollar. So it will it will perform better than the dollar. So even if it's denominated in dollars, if the dollar drops by 50% and the miners go up by 100%, you're still making 50%. So that's how it works. Of course, it's not as safe as having physical gold and silver. So now to the question that's led to me talking about hyperinflation. And this is quite interesting here, and I'm going to try to answer back. It is from the same video. It says, there is no hyperinflation in the UK. Prices have gone up for sure, but commodity prices are falling. The oil price has fallen, and prices are falling at the pumps. Gold and silver are plodding along, not doing very much. I've lost money holding on to them over the last few years. So I don't know what he means by last few years, but for me, it has done quite well over the last few years. Let's say since 2017, you see it's up every year, except last year was down 2.6%. But over the last 22 years, on average, is up 10.7%. This year, it's up about, I think it's about 8.6. Here it says 9.2, but it's come off a bit. So how you've lost money over the last few years with gold, I'm not too sure. And the other thing I would say is that gold is money, so you can't, unless you misplaced your gold and or your silver, you haven't really lost anything. That's my answer to that question, or to that comment. How many years do we have to wait before that skyrocket? I think he means the hyperinflation. I'll probably be dead when that happens. Holding on to physical gold and silver coins is not very cool either. You can't just offload them when the prices spike. You can't go down to the shop and spend them. They will look at you like you are an idiot. Well, story about the hyperinflation in Germany in the 20s. There was a young guy in his 20s. He met a group of American tourists, and I think one of them gave him a $20 gold piece, which is just under an ounce. And when the dust had settled, the hyperinflation ended in Germany, he was able to buy like a small hotel with that gold coin. That's the thing about gold, especially. you probably won't want to spend it during the hyperinflation. You probably want to try to keep it. And I've spoken about this before as well with Star Path Academy. I recommend that YouTube channel as well. He survived through hyperinflation in Romania in the 90s. And it's not just about having gold and silver. It's about being friends and having friends in the community and helping each other, because sometimes yes, you won't be able to, you have to barter. But I think silver is the best way to barter. I don't think people would look at you crazy, like you were an idiot if you gave them like a silver crown. If people weren't taking pounds anymore and you showed them Queen Victoria and a silver crown, I don't think they would think you were an idiot. So that's my answer to that. And he's talking about counterparty risk here. They have counterparty risk. Where do you store them? In your house, in the garden, with your mate down the road. What happens if you have a stroke and forget where you put them? Does your partner know where they are? Is your partner going to run off with them? Obviously, I'm not speaking personally here, but these are general considerations. If you have paper gold, you can sell it in an instant. If you have physical, by the time you offload the price, it may have dropped. Well, the thing about having paper gold, it's not gold. And when this scenario evolves, the hyperinflation, do you really think the banks like Barclays and others are going to, or the people who written the contract on paper gold are going to honor it? They won't. And yes, so as for where to store it, people have to decide that for themselves. Gold is not very bulky, so I think there's very good places to put it. In terms of your spouse, because I don't call my wife a partner, she's my wife. That's something completely different. If you don't have a good relationship with your family, of course, they're not going to know about it. If you're like hiding it from them, that's not gold's problem. You could do the same thing. You could have a bank account that they don't know about, and you have a stroke. So I don't think it's a good argument. And as I said before, hyperinflation comes a bit like a thief in the night. And during the German hyperinflation, the inflation actually, and it's different from the current inflation that we have, because it's about the loss of confidence in the currency, and we're not there yet. I agree with him, but when it happens, it happens very quickly, as von Mises said, and I'm not going to argue with von Mises because he's probably the greatest economist ever. It's not Keynes, it's Ludwig von Mises. He said, when people realize that they're not going to stop the inflation, he says here, within a very short time, within a few weeks or even days, and then it will be too late for you to prepare yourself. And let's see who this person is. It's Inquiring Mind 777. So Inquiring Mind 777. Yes, the problem about hyperinflation is when it happens, it'll be too late for you to prepare. So I would say count yourself lucky that it hasn't happened yet. And I couldn't see it happening in 5-10 years. I think it's going to happen a lot sooner. And yes, I might be dead, you might be dead, but hopefully your family will be around and they'll be able to protect themselves. I think more, not just of myself. You got to think, and I guess that's your prerogative to think of just yourself. But just to finish off, just wanted to show you this chart. And this is just from 1919, and the inflation started already during World War I because the Germans didn't tax that much during World War I. They financed with a lot of money printing and borrowing. But you can see here that on January 1919, this is the number of German marks needed to buy 1 ounce of gold. You needed 170 marks, paper marks, to buy 1 ounce of gold. And then it gradually went up to 267, and it topped in January at 1340. And when you look at our currency, I remember back in 2002 to 2005, you needed about 220 paper pounds to buy 1 ounce of gold. Right now we are almost at 1,500. And of course, it's taken longer in this day and age for the inflation to take place. But as you can see, from January 1920 in Germany until May 1921, gold actually went down, and it went down sharply in May 2020, back below 1,000. But it really started kicking off here, as you can see, in the summer of 1922. In May, it was 6,000, and by September, it was at 30,000. And that's why the bankers, they'll do everything they can to keep the gold price suppressed, because it's a really bad indicator. And what about the fact that you say that oil prices come down? Yes, it has come down. Have prices really come down at the pump? Well, from what I remember, about a year ago or more, diesel was £1.19, and now it's still 190. So yes, things have slowed down, and they did that in Germany as well. But I think they're going to pick up again. They're not going to pick up. The currency is going to drop again. That's what you need to understand. So let's look at where the markets are. Is 10 past 8 a.m. London time. Spot gold is at $17.90. It's down about $7. High's been 1800, lows 1785. Silver is down 5 cents, 23.41. High's been 53, low 23.20. The stock market futures are down very slightly. The Dow, the Nasdaq, and the S&P, so I won't go through them. The currency, sterling is down about 0.2, 122.40. The euro is unchanged. The dollar is up slightly versus the yen. The Swiss franc, the dollar is unchanged there. What about the dollar yuan? Dollar is unchanged at 697.78. What about the ruble? Dollar ruble. Let's check it out. Dollar's down slightly at around 62.50. And let's check the other currencies. They're probably not doing much either. Well, actually, the Aussie dollar is down 0.4, 67.67. The dollar is unchanged versus the Canadian, and the Kiwi dollar is down 0.4, 63.85. To the general commodities, and we're going to look at platinum first here today. Well, platinum is down 0.5% or $5, trading around 1,022. That's the midpoint between the bid and offer. WTI crude is unchanged, virtually 71.31. Brent is down slightly, 76.26. High grade copper is down about 7/8% at 384. U.S. nat gas, well, there you go. It's up 10%. Nat gas, U.S. nat gas at 678. So that's the other thing. When currencies are near their death, there's a lot of volatilities in the commodities. And it might seem like, there's no more inflation. The commodities have come down. No, but the trend is higher for commodities, but you get a lot of volatility. And we're seeing that in natural gas. So let's look at the Dutch nat gas futures, the TTF. That's down 3.5%. It's trading at 134. And to finish off, let's quickly look at the bond market. We've got the Fed, of course. On Wednesday, they're going to decide on rates. They're going to probably raise it by 50 basis points. The 2-year note is unchanged at 4.33. The 10-year is down 1 basis point at 3.55. Let's just quickly look at the UK gilt market, see what that's doing. I don't think that's open yet. Well, it is, but the 10 years unchanged, 319, the 30 years at 360, that's been ticking up as well. So with that, I'm going to say goodbye and wish you all a good day, and I will keep you guys informed about Billy.